And good afternoon. Welcome into Market Talk for this Thursday, February 24th. Great to have you with us. Thanks for making us part of your day. I'm your host, Jesse Allen. Find us online, markettalkag.com. That's our home on the web, markettalkag.com. You can stay up with all the latest, stay up to date with all the latest news of agriculture, the latest market numbers, as well as find all of our streaming sources, our social media, much more. It's all online at markettalkag.com. Well, undoubtedly a wild market today again with Russia invading Ukraine. We have USDA's Ag Outlook Forum out there as well. There's just a lot of things dominating the headlines and a lot to discuss. And here to join us to discuss all of it as much as we can, our good friend John Heinberg with Total Farm Marketing with us this afternoon. And John, I know it's been a busy day for you. It's been a busy day for everyone in agriculture, in the media, et cetera, et cetera. As you sit back here, watch this close, I know there's a lot of storylines we need to unpack, but just overall, this volatile market, I mean, what do you make of just all the volatility across the board, up or down today?
Yeah, we just got to take a little breath here after the session today, and starting last night with the Ukrainian invasion there, the military action by Russia, just obviously sending things skyrocketing higher. A lot of times we get price action like this after days like that. So I was a little cautious that we could see that happen today. We've had some good runs in this corn market and the soybean market, and maybe we just got to a point where the money said we made enough, and they took some off the table here today. One thing I'm thinking about too is, could this be some margin selling in here? There were some positions that were probably on the wrong side of this. And one way to cover your margin calls is to sell your winners to pay for your losers a little bit in that regard. And but markets have been hotter than realistically corn, soybeans, and hogs the last few weeks. So there's a lot of moving parts here, and we're going to be in a situation now that we're going to be hour by hour, if not minute by minute, following the headlines and causing some market movement. Just recently, President Biden just talked about sanctions and things of that nature. We're starting to see the stock market rally off that news. Crude oil markets sold off that news. Just again, it's going to be extremely volatile times, and it's kind of got to hang on. I'm looking at the technical pictures today. Those are very concerning to me, especially in the bean market. We're trading a dollar range and finishing towards the bottom end. That just feels like we got a little bit more room to go. But at the same time, beans are on sale. We've sold them 11 out of the last 12 days, and now we're cheaper than we were over the last 6 or 7 closes. Means they're going to be probably getting some bean activity again in the export market. So just a lot of pieces moving around out there. And again, obviously, we've talked about the volatility, how fast it can give and take away. And I don't think that's going to change anytime soon as we just watch these headlines that keep coming across the press lines.
So, before we get into anything specifically, I mean, as a farmer, if I'm looking at my marketing plan, what do I do in this situation? I know that's a loaded question, John. It could be answered in multiple different ways, but I mean, in general, is this an area where I mean, I sell? Do I sit back and wait? Do I do what's best for my business? I mean, what does it come down to in markets like this right now?
That last line you said there, you do what's best for your business in this time frame. We still got good value on the board. Okay, May corn is at 690, July is at 678. Yeah, it'd been nice to get the 720, 750 level that we saw last night, or the 715 level, excuse me, that we saw last night. Even March beans, we're a dollar off the high, but we're still looking at pretty doggone good price levels. The fear of doing nothing sometimes can basically be kind of crippling here, and that, but the risk tied to that is extremely high. If you need to move the cash sale, get some base hits, come back in, look at some of the longer term option strategies. They're still expensive, especially with the volatility high. But again, the cost sometimes of doing nothing is actually a greater risk than the cost of doing something to protect yourself. So that's kind of what I told some people today. I know we had some guys making some corn sales. That was their flat out question when we were still at $7 this morning. I'm like, why not? Move some of that. Just reward yourself when you get days like this. And again, I've said it before, you stay disciplined to targets. If you're worried about the what if, find a way to keep the ownership in the market, whether using futures, whether using options. But just definitely make sure you're covering the bottom line, because the input costs are so high that we're going to be dealing with this year. Making sure you're protecting yourself to cover some of those input costs is going to still be really key.
Well, you mentioned a few things on the soybean market. I think something else getting lost in the headlines today was USDA's Ag Outlook Forum. Planting estimates there: 92 million acres of corn, 88 million for soybeans, 48 million acres for wheat. Crop estimates for 2022: 15.24 billion bushels of corn, 4.49 billion bushels for beans, and 1.94 billion bushels for wheat. So we keep that in perspective as well. We look at the soy market, and you mentioned it: ridiculous volatility there today, like a dollar something range. I mean, well off the highs of the overnight. What happened in this soybean market today? And I've heard, really no great explanation. And I don't know if you'll have one either for us, but I mean, what can you best, describe what happened in this soy market today? Because it just feels like a lot of people really wondering what happened.
Well, again, we've had, you look at those numbers from the USDA, that 88 million number, 92 on corn in terms of acreage. Nothing really big there in my mind. I think the market was pretty much anticipating that. Overall, basically in line with last year in terms of some of the numbers and expectations were real similar. So I don't think that was the big mover in the market. Maybe just confirmation that we got a crop starting to come again can cause things, to bail out a little bit here. To me, it was about money flow and about some of the technical selling that came into place. This market got extremely overheated with the move last night, pushing 80, almost 80 cents higher or near 80 cents higher before we flipped over. You saw a lot of stop orders kick in. This market being as elevated it is actually fairly thinly traded. So there just wasn't anything underneath to grab this market at this time frame. There was a lot of profit taking out there today, and it just continued to go through the entire course of the day. Now, with that, to me, we put a target out there at 1760 on that May contract. Do we go back and revisit that? I think tomorrow could be pretty key. What if we see some new export sales? What if the weekly export sales totals are above expectations and seeing a number that we typically shouldn't see this time of year? That's just going to lead this market to thinking that the USDA needs to tighten those supplies up even further and that we could see some lift back in here. Now, with that, this market was extremely overbought. It was ripe for some picking, just like we saw over in the livestock sector with hogs yesterday. Even though the fundamentals sometimes might be a little on the friendlier side, it's about what the money wants to do. And if they've decided here that they've needed to take some profits, take some risk off the table, and that was probably a big reason what we saw the move here lower today.
Corn market, old crops finishing higher today, but new crop finished lower. And it felt like we just saw that divergence as soon as we got the day session going, that, the fears didn't go out too many months in regards to Russia, Ukraine. It's like, okay, well, old crop's going to hold on here, but new crop's just not going to, we're going to be over this by, September, November, et cetera. I mean, that was one of the general feelings I got in the trade. But what is your thoughts with this corn market and just how it came off the highs and closed today?
Yeah, that was probably part of it. Obviously, you still saw the front month wheat contracts push the limit higher on the settles today and at 50 cents up. That's going to keep that strength in that old crop corn because obviously that's the immediate reaction to the issues in Ukraine and what's going on there, in terms of the export side. And that's something we're still really watching and how that shakes out. But again, bring the opportunity to bring some more business in definitely comes into play. You did mention those USDA outlook form numbers. One number I did see through there, they put carryover about 1.96 billion bushels for next year. That's pretty heavy when you start thinking about the fact that we're trading at 640, 650 window, close to 650 when those numbers kind of came out this morning. I kind of, perked my eyeballs up to that one a little bit when I saw that number. Again, the acre number wasn't a surprise. But again, those are just baseline numbers. They're probably as good as the paper they're written on, but they're budgetary for that purpose. 10 years ago, those numbers didn't really even mean anything. And now because of the modern trade that we have with the quick read on the computers and headlines that now mean something. So we'll have to see how that kind of shakes out. Obviously that feels a little heavy for me, but at the same time that might have been enough for this old crop market to take a little bit of a pause and take some profit off if they think we have some decent weather. We're watching the second crop South American corn. Planting pace is going good there as well, so we might have some bushels we have to deal with for August, September into the fall next year, as long as U.S. weather is good. And that's still going to be the long-term wild card. So 640 corn probably was overpriced, and that may have been some of the action that we saw here. So we're balancing the news on the front end, keeping those spreads strong on the bull spreads, and then we got possibility of okay supplies coming down the pipeline, brings pressure to the back end.
Wheat market, I don't know how much time we need to spend here just because I think we know why the wheat market was sharply higher today. Obviously, Russia, Ukraine, and that felt like maybe the easy trade for traders today because more than likely we're going to see supplies tighten. We don't know by how much yet globally, but more than likely we'll see supplies tighten. I mean, what do you think this means for the wheat market tomorrow, being limit up in Chicago, KC? Are we going to have expanded limits and shoot them higher again tomorrow? I mean, what's your indication what you see on the charts right now?
That could be a pretty good possibility beyond what's going on in the Ukraine. Let's kind of spin back to let's look at what happened in the wheat charts, as well as we had the KC winter wheat ratings drop again this week. So there's definitely some concern regarding the quality of the crop that could be coming out this summer here from U.S. wheat side. The acre number, 48 million acres from that Outlook Forum, was a little bit up above last year, but still nothing, in terms of significant size. So you got this combination of possibly improving demand. We saw good export inspections so far this week, maybe one of our best for a while here in that wheat market. Maybe we see some little business. I know the market got a little bit fired up about that Nigerian purchase that came through earlier in the week, where they bought the Heinberg winter wheat for this year as well as next year. And then throw the charts in. We were on a down slope there basically all the way through, and we broke through that aggressively. And as I said before, the funds are a little bit short on the wheat market going into this week. So all of a sudden they found themselves on the wrong side of this thing very, very quickly. And I think that was some of maybe we saw the pressure in the other grains to kind of cover some of them losses that they may have had in the wheat market. Again, that margin type selling, sell those winners to cover the ones that are going against you. So, kind of a perfect storm came together, obviously kicked into high gear with what's happening in the Ukraine. Now, finishing right at limit higher today, that's still encouraging that there's still some pent up buying that's wanted to be out there. There's going to be still some stop orders that are probably up above this, are waiting to get triggered. Don't be shocked. We see some strong follow through. Maybe not tomorrow as much because of being Friday. And we'll look at those export inspections tomorrow, or those export sales numbers, tomorrow. But definitely, if this thing continues to be a volatile activity in terms of the news front over the weekend, wheat's still going to be the benefit of the whole issue that's going on in the Ukraine.
Protein sector today, livestock sharply lower, and I would have to think a lot of that tied to obviously the higher feed prices. But one has to wonder, did the stock market being lower really pummel cattle and hogs today? Is it fears of consumer pullback and demand? I mean, what's your thoughts here? I would think cattle and hogs maybe tied together a little bit today, just with everything maybe combining to pummel all three of these complexes here, John.
Yeah, start first off, cattle market. We lost momentum on the cattle market here a couple of weeks back when April tried to push through the 149 barrier and failed. We actually put a head and shoulders pattern together. We completed that, just yesterday. So we were set for a break there. Now, the stock market being down 800 plus points at the start of the day did not help. That's that indirect correlation that's always there between the two. Obviously, the jump out in grain prices on the open put feeder cattle quickly on the defensive with a big gap to the downside. So we just fell apart technically there today on a market that was already starting to show me some signs that, that upward momentum, at least in the short term, was lost. You know, Realistically, though, even though we're on the lows here today where we finished up, we're still in an uptrend on these cattle markets. We're down testing the bottom and the key support levels we need to. We got cattle on feed coming tomorrow, so maybe we've overdone this a little bit. We'll have to watch that tomorrow. I do think a lot is going to come down to where the grain markets are in the morning. If they're fairly calm, I think you'll let cattle breathe a little bit, especially going into that cattle on feed report here on Friday afternoon. So with that being said, we're still in an uptrend. But again, just like that hog market, we were due for a little bit of a test of the lower levels, and we're doing that. Now, the key is, do we have enough strength here to support that and hold those levels, or do we have further room to fall?
Now, the hog market yesterday was a pretty rough down day as well. And one had to wonder, is this the correction that we need? And then we come in here today and do it again. And obviously, some other factors weighing in. But do you think the hog market is finally starting to realize we're really overbought and correcting itself? What do you think, John?
I think that's a big part of it. Yesterday, we saw that hard push earlier in the April contract. We took that April futures well over the index. We're getting to the end of the month of February here, so we're probably seeing some scoring up there. Just felt like the April contract got out a little bit over its skis and was basically due to take a tumble. Now, with that, we've pulled $5, $6, $7 off this thing pretty quickly, hitting the 10-day moving average under April hogs, closing just under that. Summer months are sitting right on that. Realistically, we're still in a strong uptrend. We're just at the bottom of the range holding the support. The fundamentals still continue to be pretty good. Hog carcasses are strong at midday. Cash market is still fairly firm. It just felt like we had a little room to take some premium out here, at least in the short term. Hog production or pork production right now is down about 8.5% since for the year, and that just shows you that we've just missing the hog numbers out there, and the demand continues to stay strong. Then you look at the competing meat prices. Beef is still as strong historically here for the retail values. Poultry is historically strong. Those higher prices in the chicken market make pork look like a value overall. So I still think this market has some support in it. Maybe we got to take a few more dollars out. Wouldn't be shocked me if we break it down another couple bucks here. But again, the fundamentals stay there. That I think we just take some air out, and this market might find some footing again, just given that tight supply picture that's out there.
John, as well, I should ask on the financial equity side, energies. I know as well. You mentioned crude oil's pulled back after President Biden talked this afternoon. Well, I mean, we saw West Texas Brent crude well up over $100. I mean, so thinking about that, thinking about equities, thinking about all these sanctions that are being put on Russia, what do we need to really watch out for the next couple of days in terms of stocks, equities, energies, etc.?
Again, technical levels are key. We hit $1 on that, or $100 on the crude oil. Sellers were sitting there waiting for that last night. They just jumped in and pushed this thing. We're watching those comments by President Biden again. What are we doing military wise? What are we doing sanction wise? The market seemed to be very appeased the fact that he kind of insisted that we are not still going to do anything militarily. It's going to be done more on the economic side through the world of sanctions. So we saw some things rally. You saw some of those markets, like the NASDAQ market today, did break down to a 20% correction point. Buyers stepped in immediately, and it's going to close with triple-digit gains. So again, that's going to be one of those ones that got to watch the money flow and the technical side of things here. And these markets might move more because of just technical barriers holding or bouncing or breaking than they are based on what's out there in the fundamentals. Because right now, it's really going to be a wait and see attitude with how things work in terms of the sanctions, in terms of the impact on the economic side of things. But again, just the pure fact that we're not looking like we're going into a military type mode in terms of a response just made the market relax and ease itself a little bit. I wouldn't be surprised that comes back and helps out in some of those ag commodity markets tomorrow as well. Just take that fear out of the market and make markets feel a little bit more stable, that things aren't going to just totally blow up across the world.
John, before we run out of time, floor is yours. I'm not gonna push you in any direction here. Any final thoughts you have for us? Anything else you want to reiterate or tell us here today?
You just got to be patient right now. There's still make sure we're focusing on what the fundamentals are. The money flow and the amount of money that can move in and out of these markets is so aggressive at this time frame. Again, I've said it before, be disciplined, set your targets. Don't be afraid to pull the trigger and make sales when there's profitability on the table. Then find a way to manage the risk over time. Just seeing how quick, but basically from midnight last night to 10 o'clock this morning, we had $1 move in the soybean market. That just tells you how fast these things can move one way or another. You can't let day-to-day actions kind of mess up with your brain and your thought process. As long as you stay disciplined to your targets and make those sales when the time is there for yourself.
John, I know if folks need some advice in these volatile markets as well, they can reach out to you and the folks there at Total Farm Marketing. What's the best way to do that?
Sure, I'd love to chat with them anytime. Feel free to give me a call, 800-334-9779, or feel free to shoot me an email at jonh@totalfarmmarketing.com. And again, don't forget about our website, totalfarmmarketing.com. A lot of great information for producers out there. And sorry, next time I'll mute my phone.
I was going to say, as evidenced by the cell phone going off in the background, he's a busy guy today, and we appreciate the time joining us. John Heinberg with Total Farm Marketing. Have a great weekend, sir. We'll talk to you next week.
Sounds good. Doggone telemarketers. Have a good weekend, everybody.
John Heinberg with Total Farm Marketing. Our guest today here on Market Talk. Find us online, markettalkag.com. I'm your host, Jesse Allen, wishing you a great rest of your evening.